Hey everyone, and welcome to the latest edition of Earnings Cheat Sheet for Friday, March 7th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, earnings season is slowing down to a trickle, but I think you have a few names for us still.
Yeah, a few names that people have been interested in. Oracle, also Viking Holdings and Futu Holdings from China.
All right, well, let's start with Futu Holdings, shall we, which is scheduled to report Q4 earnings on Thursday, March 13th. Earnings for the Chinese online brokerage platform are expected to rise 93% to 156 per share, and revenue is seen climbing 61% to $488 million. And here's why we're watching Futu. We'll be looking at the number of users and paying clients. And Ed, Futu stock has been on the move after the Chinese government issued its gross domestic product targets for 2025. And it looks like they might put out a stimulus to inject maybe some life into the economy. But what's on your radar with Futu?
Yeah, I mean, so that's part of it. One, it's Futu's been doing well because of that, but strictly on the earnings, yeah, I mean, we've seen accelerating growth for that company. It's an investment broker, and stocks are starting to pick up. Hong Kong is at a 3-year high. Chinese stocks not as strong, but still that's providing enthusiasm. When you see the markets, that's always good for brokerages. It's like, hey, investors are going to come back into the market. So this was one that we're seeing a lot of China stocks come up, and this is one of those that is, looking more actionable than a lot of other names, which are either too extended or still coming up from lows.
All right, Ed. Well, let's look at the chart because this one peaked above this 130.88 buy point here on February 21st, but it pulled back with the overall market. But we can see it's really rebounded off of this 21-day line, almost kind of looking like a little bit of a handle here out of this cup base. But what are your thoughts with the technical action?
Yeah, I mean, this basically is a cup with handle, and that's how we're going to treat it essentially. The problem is this trade's pretty wide and loose. I mean, okay, China stocks often do just partly because often trade elsewhere and then they come here, but you can see big daily swings, there's big weekly swings, there's intraday swings. So this is one that you have to know, and you never know what's going to happen with the China market. I mean, there could be that the stimulus will disappoint. A number of times it seemed like China was going to come out with big stimulus and hasn't. Now they have done some stuff that seems like they really are going to step up deficit spending, suggesting they really will. So there may be reason to hopeful, but so this is sort of breaking the trend line of a downtrend of a handle. So one could have say earlier this week, bought that on that, but earnings are coming up. And so the question is, if you buy it at 130, is that getting too extended? So it just makes it tough to do here. This is something that you have to know. This is extremely volatile. If you buy something like this, it's nice to find early entries. That may not be possible here, but still, it has a nice technical action. The relative strength line has been picking up. It's in the highest levels in a while. It's sort of above the handle high already. It's not the high for the base, but it's above where the high of the handle is, which is reflective of how U.S. stocks are not doing so well. But I think investors they should definitely be looking beyond the U.S. The U.S. is, after a long, long, long stretch of outperformance, right now in 2025 for various reasons. Chinese stocks, European stocks are outperforming, and this is one to look at.
And since you brought it up, I wanted to ask because as we're heading in sort of to the end of this earnings season, we are technically in correction territory here. So, how does that change your approach to buying stocks during earnings, or does it? Like, what are things to keep in mind?
The odds just become much less. I mean, the thing is, the reason why it's like an uptrend, it's like just floating down river. Stocks are generally going to go up. You're generally going to go in the way you want to go. When things are, when it's in a correction, you're fighting it. You're trying to fight the tide, literally. I mean, just try to imagine swimming against the tide. It's really, really hard. That's one reason why you might think about China or European stocks, because those are rallying. So they've got their own momentum, and so they're not in corrections. I mean, if the US market sells off, that's going to have impact elsewhere, but that's definitely something there. But yeah, it just makes the odds even higher. So earnings season is dying down, but there is plenty of uncertainty. And in general, investors should be very cautious about buying stocks.
All right. Well, speaking of tides, let's move on to our next stock, which is Viking Holdings, which is scheduled to report Q4 earnings on Tuesday, March 11th. Earnings are expected to rise 45% to 145 per share, and revenue is seen climbing 19% to $1.337 billion. And here's why we're watching Viking. We'll be on the lookout for any updates on demand and booking trends, and we'll want to see if executives comment on Royal Caribbean competing in river cruises. That won't happen until 2027. But it looks like analysts expect the expansion in fleet size for Viking to maybe help boost earnings this quarter, and also maybe seeing some strong demand and favorable pricing. But with inflation and a lot of this geopolitical uncertainty hanging out there, that could be a headwind for Viking. But what are your thoughts here as earnings approach?
Yeah, I mean, Viking has done very well since its IPO. Strong earnings. It's been definitely one of the leaders along maybe with Royal Caribbean, but Viking is even stronger growth. It's just something that there's a lot of like when you think this tends to cater more towards older cruise like, but there's a lot of baby boomers who have a lot of money and so who don't necessarily want to go onto a carnival cruise with tons of kids. So this is often can do very well. I do think that there like some uncertainty, maybe animosity, weaker dollar. There's all sorts. I mean, those things can impact how much they can charge, how much there's like, and it's hard for me to know how that all interacts. But that's something that is maybe affecting travel stocks in general. Um, but this is definitely one that's been doing very well as a stock and as a company.
And let's look at the chart, Ed, because we can see how well this one's been doing. Broke out of this flat base here on January 17th, hit a high of 53.14. But as we've seen with a lot of stocks, pulled back with the overall market and is now trading below the 50-day line, looking like maybe if it can hold at this 45 level. But you can see that it's trying to hold steady here. So, what are your thoughts with the technical action?
Yeah, I was trying to fight the tide, just hasn't been able to. I know it's just it was looking very strong, and the relative strength line was surging along with that. But then it started coming under pressure. And a lot of others did. There were some other reports about taxes on cruise lines, which really wouldn't affect Viking because almost all their operations are outside of the U.S., so that's not really relevant. But you can see that's sort of with a lot of stocks. They did okay for a while. Then it fell through the 21-day line. Then it held the 50-day line for a while. So okay. And it's just this last few days that it's really started to break it. And like today, it's starting to lose sight of that 50-day line, like closing well below. So that's just the thing that happens in a correction. Some stocks will fall right away, and some will hold up, but you just don't know. And so earnings were coming up. We're in a correction. This one may need to base again. I mean, I suppose if earnings come in and the market has a fall through day, something could happen, but it would still look sort of damaged. This one may need just to set up again for a few weeks. Definitely one should be on a radar though.
And I'm just going to switch over to the weekly here because we can see this earnings and just solid revenue growth expected here through the next year. So, any thoughts on the weekly chart?
Yeah, again, solid performance. And they do have a lot of demand and there's a lot to like. Even now their up down ratios are 1.2, which is going to be a reflection of some of the probably some buying that happened a few weeks ago because the accumulation distribution rating has tumbled to an E, which that shows there's been a real shift. That's the lowest possible. So that's unusual to see that kind of dichotomy. But there's a growing number of funds. That's probably gonna continue, at least trend up over time. But it's just not in a good position technically right now.
All right, well, let's move on to our next name, which is Oracle. That company reports earnings on Monday, March 10th. The computer software giant is expected to see fiscal Q3 earnings rise 6% to 149 per share, and analysts expect revenue to climb 8% to $14.39 billion. And here's why we're watching Oracle. We'll want to see if there are any updates or additional information on the Stargate effort. And can Oracle Cloud infrastructure keep growing at a 50% plus pace, Ed? And we saw Oracle rally on this enthusiasm about the $100 billion Stargate AI project. That was before DeepSeek
Yeah.
happened. But analysts are debating if this earnings report can help the stock break out of a slump.
Yeah, it'll be interesting to see because the Trump event with Stargate almost feels like the last gasp of everything on the AI front. And so there's been a lot of talk about Trump tariffs, but clearly part of the reason why the market struggled is that the market fundamentally is worried about, the valuation demand for AI hardware stocks. And this is like, I mean, this is software, so it's not hardwares per se, but it definitely has that kind of infrastructure nature to it. And all those AI infrastructure stocks are really struggled. Yeah, so this earnings report probably won't reflect any of that. The concern is, well, what are they going to say about the future? And AI cloud infrastructure, as you say, like, can it grow, keep growing that fast? It's much, much smaller than, say, Amazon or Microsoft's cloud computing or Google or a number of others. But there's a lot of things, there's a lot of things that made it attractive to certain ones. So if that can keep going, that would be fine. Because this is one that's finally turned the corner on sales growth. Because it just seemed like there was these older businesses that were slumping, and the new businesses just weren't big enough. And they are big enough, and they're growing fast enough. But the outlook is going to be really important.
Right, and you mentioned Amazon, Microsoft, and Alphabet or Google, and Oracle really seems like it's trying to compete and be an alternative to those big three. But looking at this chart here, Ed, we can see this one's been in consolidation, 198.31 official buy point, but today looks like it undercut the low of that base. But yeah, talk about what you think this chart looks like. And, again, we've seen, especially with a lot of AI stocks, a lot of damage to these charts. So what are you hoping to see here as earnings approach and beyond?
Yeah, I think this one is really broken or literally damaged. Maybe not broken because it's just now getting close to breaking down. Hasn't entirely done that, but it looks really damaged. It sold off after earnings the last time. I mean, that actually was bad. It gapped up on some of the Stargate news. There was sort of the 2 days. There was all this buzz that there was Stargate, and then it gapped up on the actual Stargate, and then immediately basically began falling on the DeepSeek. So it just looks really, really damaged. And it's hard to know, even if they say something positive themselves, like they see something positive, if the general feeling is that eventually the AI spending is going to slow down considerably, at least slow down considerably relative to what people had been hoping for a couple of months ago, that will eventually get to Oracle. So I think this needs a lot of repair work and just needs to have more of that shift back to thinking, yeah, AI hardware and AI infrastructure names really have a lot to go for it. It did grow nicely for a while, but it's still not growing. It's not growing at the pace like some of these other names. And so that would be an issue. Can it keep growing? Could it keep advancing in, even with that growth rate? Because it had made a big move over a couple of years. Basically had tripled from like the low of 2022 to the peak. So that was a pretty good move for a company that's growing, but not like wow growing. So even in that, and so when you bring that and say, well, wait a second, we don't know if any of these things for any of these companies is going to work. So this is also, I think, really important because this is the last one of those reports that we're going to get for a while. I mean, this is going to be our last earnings cheat sheet for a while. It's going to be our last maybe big name in the cloud computing AI-ish kind of space that we're really going to see for a few weeks. And so I think that's probably the most important thing. Get some sense from that.
And we're just on the weekly here. You could see the run that you were talking about, and also just the sales growth here looking pretty decent, and also
Yeah.
earnings growth looking pretty solid and consistent over the last few quarters. Anything else standing out?
Yeah, it has picked up, and that's nice. It's just like that's one reason why, because there's finally that acceleration, because it really was sort of like flat, 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 or down for a long time. But it's picked up. But that's can that continue? I think there's just a lot of questions for all sorts of these companies.
All right, Ed. Well, those were some of the big names on our list, but we have a few more in store for you. Staying with the software theme, let's take a look at Rubrik, which reports on March 13th. And we're still on the weekly here. I'll switch back over to the daily just so we can see that another name, again, breaking down with the overall market, hit this high of 80, but it has since drifted below the 60 level, below the 50-day line. But what are your thoughts here?
Yeah, we've had a few cloud security companies this week report, and definitely mixed. And highly valued companies have just come under pressure, and this one isn't profitable yet, which makes this really, it's so that's just a trouble. There's a lot to like about this name. It's got accelerating revenue growth. It seems like the losses have been shrinking somewhat, but they're not going to go away anytime soon, supposedly. But this one needs time, and it's just not it's not the market for this kind of stock right now.
All right, well, let's look at DocuSign, which also reports on March 13th. And again, this one broke out back here in October and hit this 107 high. Was trying to maybe digest some of those gains, but has really rolled over in the last month or so and well below that 50-day moving average.
Yeah, I mean, sort of it's not necessarily deep seek, but for whatever reason, you're just seeing again all these tech names come off. This one isn't crazy valued or anything, and it's got decent growth, not tremendous like it used to, but that's fine. It's more mature. There might be just concerns about deal making and just signatures, but in any case, it just needs a lot of repair time. You know, it was holding up for a while, but as you say, then it didn't, is what it comes down to. And so it needs more time.
And let's take a look at Adobe Ed. They post results on March 12th. And again, this one, was doing well for a while. And like you said, then it wasn't. But this one well below the 200-day and looks like it rebounded above the 50-day line over the last week. But any thoughts on Adobe? This used to be a leading stock, but has come under pressure.
Yeah, I mean, this is a situation where a couple things. One is that a lot of this selling is first there was hopes, hey, maybe the AI can be a boon to this company. And then it's like, ooh, maybe AI will be a big threat to this company. A lot of this stuff, and just we don't know, but it's just that's still unclear. But if you start thinking in less about opportunity and more about fear, that really changes the dynamic. And you can just see how even when it's rallied, the relative strength line, never got toward highs. It was still like it was trying to rally and even flirted with some breakouts, but they just really weren't going. And every time the relative strength line was coming trending down, it had been on a good run, but you can just see the last little bit, it's really come down. It's probably needs a lot of work. I mean, there's a lot of people who bought over the last year who probably would like to sell. And that's something, there's that overhead resistance. That's another thing to fight. Again, at some point, stocks that do recover manage to do that, but it just this looks really, really sickly, honestly, for the past year plus. Just is not doing well.
All right, Ed. Well, let's take a look at a retail name, Dick's Sporting Goods. Maybe that one is doing a little bit better. We're still on the weekly here, and we can see this broke out of a consolidation the week ending January 24th. And again, has pulled back, a common theme we've seen here, but looking like it's trying to hold at that 40-week line, trading just uh, below that, about 1.7%. So, what are your thoughts here with Dick's Sporting Goods?
And we've seen some big moves this week with retailers. So, I mean, you could go either way, but that just makes it so dicey. A breakout failed. The 50-day, 10-week line failed. It's now below the 40-week and presumably the 200-day. I mean, it could come back and recover. It's not crazy. It's sort of in this whole back in the range. It tried to break out, but really it's sort of been in this range for almost a year now. I mean, really, when it comes down to it. So it wouldn't be shocking if it could come back and go build a base again, but it just seems like it does need repair work, with going forward.
All right, Ed. Well, thank you so much for your insights. And that wraps it up for this season of Earnings Cheat Sheet. If you want even more market analysis, you can tune in to Stock Market Today with Alyssa Quorum. That goes live after the closing bell. Thank you so much for watching, and we'll see you all next earnings season.